In the previous key, we examined the stock market as an economic system, its purpose, functions, and participants. The next logical step is to understand how an individual participant gains access to this system. The stock market is not an abstract space that can be entered directly. Its operation is supported by a complex infrastructure consisting of organizations, technological solutions, and regulatory mechanisms. For a retail trader or investor, the key elements of this infrastructure are the stock exchange, the brokerage firm, the trading account, and the trading platform. The objective of this key is to develop a clear understanding of how access to the market is structured, the roles performed by intermediaries, and how transaction securities and execution are ensured. Market infrastructure is the set of organizations and technological solutions that ensure the stable functioning of the stock market. Its core elements include stock exchange, brokerage firms, clearing organizations, settlement centers, depositories, trading platforms. Each of these elements performs a specific and well-defined function. It is important to understand that a retail participant doesn't interact with the market directly. Access is provided through the brokerage system. Direct access to an exchange is available only to professional participants with the appropriate licensing and status. A stock exchange is an organized trading venue where buy and sell orders for securities are matched. The exchange performs several key functions: ensuring transparency of trading, facilitating market price formation through supply and demand, standardizing trading rules, overseeing the proper execution of transactions. The exchange doesn't make decisions to buy or sell. It provides the environment in which brokers and other professional participants interact. Retail traders do not send orders to the exchange directly. This is done through the broker. A broker is a licensed financial institution that provides clients with access to exchange trading. Through the broker, the following functions are carried out: transmission of trading orders to the exchange, executing of transactions, accounting for cash and securities, settlement of trades. Without a broker, participation in the stock market by an individual is not possible. Let us examine the broker's functions more systematically. The first function is market access. The broker provides both technical and legal connectivity to exchange trading. The second function is trade execution. All client orders are processed through the broker's infrastructure. The third function is asset custody and record keeping. The broker interacts with depositories to register ownership of securities. The fourth function is settlement. The accurate debiting of cash and crediting of securities is ensured. The fifth function is informational support. Clients receive access to quotes, reports, and transaction history. The broker doesn't make trading decisions. It provides the infrastructure necessary to execute them. When selecting a brokerage company, it is important to consider several factors: regulation and reliability of the company, commissions and fee structure, quality of the trading platform, available instruments, stocks, options, ETFs, availability of paper trading, demo accounts, quality of customer support. The choice of a broker should be based on reliability, functionality, and ease of use of the trading platform. Choosing a broker is an individual decision and depends on the goals and experience of the market participant. Examples of brokerage firms: Charles Schwab, one of the largest brokers in the United States, provides access to stocks, options, and ETFs, as well as the Thinkorswim trading platform. Interactive Brokers, a professional trading platform offering broad access to international markets. Fidelity Investments, a large investment company with extensive analytics and educational resources. SoFi, a financial platform offering both investment and banking services. E-Trade, an online broker with a convenient platform for investors and traders. Robinhood, a popular mobile application with a simple trading interface. The brokers listed above are provided for educational purposes only and do not constitute investment advice. Brokerage activity is subject to oversight by financial regulators. Regulation is designed to protect client funds, ensure transparency of operations, prevent fraud and abuse. In general, client funds are held separately from the broker's own funds. Transactions are recorded in accordance with regulatory standards. Brokerage operations are subject to reporting and supervision. Understanding the regulatory environment is a critical component of responsible market participation. A trading account is a brokerage account that records the client's cash balance, owned securities, the history of all executed transactions. Opening a trading account is a mandatory prerequisite for beginning to trade. It is not a traditional bank account but a specialized financial structure designed for market participation. At the initial stage, it is important to distinguish between two primary account types. Cash account, trading is conducted exclusively using the client's own funds, and margin account allows the use of borrowed funds provided by the broker. Within this course, the primary focus is on understanding the cash account as the foundational and more conservative entry point into the market. As an example, we will look at the process of opening a brokerage account with Charles Schwab. The procedure is very similar with most brokers. First, we need to go to the broker's official website, schwab.com. We can see accounts and products, advice, pricing, why Schwab, and other resources. We go to pricing, select commissions and fees, and we can see that the commission for buying and selling stocks or ETFs with this broker is zero. We go back, open an account. Here we can see different types of accounts offered by this broker. In this case, we are interested in an individual brokerage. Scroll down, get started. At this stage, it is required to fill out a standard application form, which includes personal information, tax details, country of residence, and financial experience. These details are required for the broker to comply with regulatory and financial security requirements. After completing the application, the broker may ask you to verify your identity and upload necessary documents. Once the account is approved, the user gains access to their brokerage account and can proceed to the next step, funding the account and using the trading platform. A trading platform is the software interface through which a client interacts with the market. Through the platform, the participant analyzes charts and market data, places buy and sell orders, monitor positions, track trade results. It is important to understand that the platform is a tool. It doesn't form prices, make decisions, or influence market movement. It simply enables the technical execution of trading actions. To download the platform from Charles Schwab, we need to go back to the homepage of schwab.com. Accounts and products, trading, thinkorswim trading platforms. Here we can see different options. We can download the thinkorswim desktop version. There is also a mobile application which I use as well, and it is also possible to trade using the thinkorswim web version. Personally, I use thinkorswim desktop as it provides a full set of tools for analysis and trading, while the web version has more limited functionality and can be considered as an additional solution. For a retail participant, entering the stock market involves several sequential steps. First, selecting a brokerage firm. Second, opening a trade account. Third, funding the account. Next, learning to use the trading platform. And then placing trading orders. Each step requires a conscious approach and an understanding of its role within the overall system. If you are just beginning to explore the market, it is recommended to start with paper trading, a simulation of trading without risking real capital. Many brokers offer this option. This allows you to become familiar with the trading platform, test strategies, learn how to place orders. At the initial stage, several misconceptions are common. The broker makes trading decisions on behalf of the client. The trading platform influences price movement. Direct exchange access is possible without intermediaries. Technical tools replace market understanding. Recognizing the true role of each infrastructural element helps develop a professional approach in trading. Stock market infrastructure is a logically organized system that provides a safe and technically sound access to exchange trading. The broker, trading account, and trading platform are the core elements of this system. Understanding their functions creates the foundation for transitioning to practical work with charts and market analysis. In the next key, we will examine the trading platform and the price chart as the trader's primary working tools.